This manipulation move happens every time before an explosive move to the upside. This is called a V-shaped reversal. In this video, I'm going to be showing you guys how to spot these reversals with the manipulation X indicator. This setup has an extremely high win rate and a very high risk to reward when you're using the rules I'm going to be sharing with you guys in this video. And don't take my word for it. There are traders inside the Discord literally printing every single day using this formation. So I'm going to run through it all in this video. Make sure to watch this until the end. This is going to be a good video. So without further ado, let's jump into it. All right. So what is a V-shaped reversal? Well, it is as it sounds. Okay. It's a sharp move up and then a sharp move down, or a sharp move down and then a sharp move up in the formation of a V, hence the name V-shape. Not super complicated, right? So it will look something like this: a sharp move down and then a move up, okay? Or the opposite for a short position, which would be a sharp move up and a sharp move back down. Now, the reason this works so well is because order flow on a lower time frame is shifting in real time through the use of liquidity sweeps, momentum, and inverse fair value gaps. Those three confluences allows you to catch the manipulation move before the expansion to the upside. If you look at any sort of expansion move, if you go down to a lower time frame, you will almost always see this formation appear on your chart. So here on NASDAQ, I'll show you guys some real-time examples using my manipulation X indicator of what this will look like. Okay, you can see here we have a V-shaped reversal, right? A sharp move up and then a V-shaped reversal down. This kind of looks like a V-shaped reversal, but this actually would not be a valid trade. And I'll jump into why in just a second. Here we go, right? V-shaped reversal right here, V-shaped reversal right here, V-shaped reversal right here. You guys kind of get the gist. So the logic behind this V-shaped reversal is going to be, like I mentioned, liquidity sweeps, momentum, and then an inverse fair value gap. That is the logic behind these signals on our new indicator. Now, it's pretty simple to spot what this looks like, but how do you put it into actual logical terms, right? Because you need logic behind a V-shaped reversal. Well, I consider a V-shaped reversal an inverse fair value gap within 4 to 5 candles. You can see here, after we sweep this liquidity with that oscillator oversold, we get that buy signal on the indicator, and you can see that we actually inverse this bearish fair value gap within 2 candles, right? So we're not consolidating below, chopping around, and then reclaiming, right? We're going straight down and straight up, right? You can see here, we have bearish momentum, we go straight up, and then within 4 to 5 candles, we see that inverse fair value gap, creating that V-shaped formation. Again, you can see it right here within a few candles. We have that sharp move down, taking out external liquidity, bullish momentum, the algo flashes that signal, and you can see that we have an inverse of that fair value gap, again, within a few candles, making this a V-shaped reversal. This was from yesterday. Again, you can see we have sweep of liquidity, V-shaped reversal, V-shaped reversal. Further yesterday, we have another V-shaped reversal here, V-shaped reversal here, V-shaped reversal here. So all it is an inverse within like 4 to 5 candles. Now, this is great, but there's still other ways that we can increase our win rate using the V-shaped reversals. I mentioned a sweep of liquidity as the first piece of confluence, which, by the way, our indicator always waits for a sweep of liquidity before entering the trade. And you can see for yourself, just how accurate these signals are on their own, just with the inverse within a few candles. But we want to wait for those higher probability A+ setups. There's a few rules that I add on top of the indicator signals to ensure that I'm taking an A+ setup. Okay, number one, like I mentioned, is a sweep of external and internal liquidity. Sweep of external and internal liquidity. Now, what the hell does this mean? Well, when I'm looking for these V-shaped reversals, I'm first looking for a sweep of a higher time frame liquidity level. For example, right here, if I look left, even though this was a V-shaped reversal and it would have hit your break even, this would not be considered an A+ setup in my opinion, because we didn't sweep an external liquidity level, we swept an internal liquidity level, right? An external liquidity level is going to be a very obvious pivot high or pivot low, or just a higher time frame liquidity level. You can go to a 5 to 15 minute time frame, look for these obvious levels, and those are going to be your external levels. Now, you can also use key levels such as a previous day high or low, a previous session high or low, pre-market high or low, etc. Those levels are going to be strong draws on liquidity. You can oftentimes see reactions from those levels. Number 2, we want to make sure that these reversals are delivering from a point of interest, okay? Now, there's many different ways that you can identify a point of interest. One of my favorites is a key level with price history. So a higher time frame support or resistance level where price has reacted from multiple multiple times in the past. It could also be a higher time frame golden pocket fib, or it could be a higher time frame fair value gap. So if I go here on NASDAQ, you can see that we had a 1 hour bullish fair value gap. And if we go to a lower time frame, you can see that all the way to the left here, we had an external liquidity level and an internal liquidity level, right? Two sets of liquidity overlapping our point of interest, which in this case was a 1 hour bullish fair value gap. So we would say that price is delivering from or has tapped into our point of interest, and then we get that V-shaped reversal. So now we're using higher time frame context in line with our lower time frame V-shaped reversal. Number 3, we want to look for bullish momentum. Now, this is automatically coded into our manipulation X indicator. We do have a feature if you guys want to turn this off, but I recommend leaving it on if you're looking for those A+ setups. Now, what does this mean, right? All bullish or bearish momentum is a bullish or bearish divergence or the oscillator overbought or oversold. You can see we got this buy dot on our easy oscillator, which again is coded into this signal, telling us that price is oversold as we are coming down into our point of interest. We can also look for bullish divergences. In this signal, we didn't get a bullish divergence, but the signal still flashed because we had that bullish momentum confluence with that buy dot on the oscillator. So if you have all of these marked off, you're delivering from your higher time frame point of interest, which could be a higher time frame fair value gap, which by the way, we are incorporating into the manipulation X indicator in our next update, a higher time frame support or resistance zone, or a higher time frame Fibonacci retracement level. You're seeing that external liquidity sweep as you're tagging into your point of interest, and then you get that V-shaped reversal. This is already an A setup, meaning you can take the trade 10 times out of 10 when you have all of these confluences here on your chart. Now, to make this an A+ setup, we want to use two things, okay? Time and also a high time frame or daily bias. Now, how do you figure out what your daily bias is? So if I go to a 4-hour time frame here, I can see that NASDAQ is in price discovery. So my bias is going to be looking for long positions. Now, that doesn't mean that we can't take short positions if we see the first 3 confluences play out, but that's not going to be an A+ setup. An A+ setup, which is a setup that you'll normally find around 5 times per week, is going to be in line with your daily bias. Now, because NASDAQ is in price discovery, a daily bias is simple. I'm looking for longs. Whenever an asset is in price discovery, you want to be looking for longs because you have bullish momentum. The trend is bullish. The higher time frame EMAs are bullish. Structure is bullish. So you're going to want to be looking for longs on a lower time frame for that A+ setup. And what I mean by time is mainly New York Open. If we're talking about NASDAQ, a lot of the times when you see that manipulation move, it's going to be a sweep of a previous session or a previous day level. For example, here on this signal from yesterday, this was at around 9 a.m. Eastern, which falls into line with our timing because we know that volume starts to pick up right around 9 a.m. Eastern before New York session opens and during New York session. But price always outweighs time. If you see a good setup, if your confluences are met, you can always take the setup. Never be afraid to take a certain trade when all of your confluences are met just because of the time that you're in. If you have a solid setup, you can take that setup. So using the example from the other day, we had a 1 hour bullish fair value gap here that we were delivering from. So that is our point of interest. We saw that sweep of external liquidity as well as internal liquidity. We had bullish momentum, and then we saw that inverse within 3 to 4 candles. So this was a clear V-shaped reversal. This one was an A+ setup. Okay, if we look left here, we see we have an A setup here, right? Again, bullish momentum, taking out these external liquidity levels, followed by a V-shaped reversal. We didn't have our time confluence because this was at 7:30 a.m., so a little bit too early for me to trade. It also was not delivering from a higher time frame point of interest, and we did have this external low below. Now, when you're looking for these V-shaped reversals, it's very important that the fair value gap that you are inversing is a noticeable fair value gap. It should be a decent size fair value gap. It shouldn't be a small one. You know, this is a very clear and obvious bearish fair value gap. That's why this trade was valid. A lot of the times, if you see that this system doesn't work, it's usually due to the fair value gap not being a noticeable fair value gap. Going back to another A+ setup over here, we had a sweep of external liquidity. We have this low all the way down here that we swept, bullish divergences on our oscillator. And then take a look at this signal right here. You guys can see that not only are we sweeping this internal low, we're also sweeping that external low. And this is a very noticeable fair value gap, right? A sharp move down and then an instant inverse within 2 to 3 candles, making this an A setup. We weren't delivering off of a higher time frame point of interest, but we did have this sharp inverse making this an A setup, moving your stop loss to break even at the most recent structure high, TP1 right here. These are trades that our members are entering as well, right? I'm not just showing you guys random signals, our members are taking these. This following signal here, I would consider a B setup. We were not delivering from a higher time frame level, but we did see that break of structure to the left here. So this is going to be our 1-2 setup. You can see it comes right into our optimal trade entry, and we had some low resistance liquidity above. This is going to be your supply line, and you can see that there are no bearish fair value gaps in this, telling us that this liquidity is most likely going to get taken out. And again, you can see we had a V-shaped reversal, bullish momentum on our oscillator, a very obvious, noticeable bearish fair value gap that we inversed. Again, no sweep of external liquidity, making this a B or a B plus setup. So if you're brand new to the strategy, I wouldn't recommend taking trades like this. I would personally wait for those A plus setups until you get the hang of what to look for. And then once you're profitable with those A plus setups, then you can start to look for trades like this once you get the hang of how the market moves. And again, to manage this trade, you're moving your stop loss to break even at the most recent structure high, targeting external liquidity, which it hit right here for around a 1 to 2.7 risk to reward. Again, another B setup right here, bullish divergences, very clear and obvious bearish fair value gap that we inverse, taking out internal liquidity. Again, no sweep of external liquidity, but we did take out 2 sets of internal liquidity right here. This one would have been a break-even trade. So looking at the next signal, we have an A setup. Okay, we swept external liquidity, this low all the way to the left here. Very clear and obvious V-shaped reversal within a few candles, immediately inversing this bearish fair value gap, reclaiming that previous low. And we had bullish momentum. We're not delivering from a higher time frame point of interest. This still would have been an A setup. TP1 right here, targeting these external highs as your take profit, which this one did, reaching around a 3 risk to reward. Okay, here we see a V-shaped reversal with bearish momentum. But remember, our higher time frame bias is bullish because we're in price discovery and no sweep of external liquidity. So this is not a valid trade. Again, another V-shaped reversal. Even though these shorts are working out, it's still not smart to take them, right? Because our bias is bullish, we're in price discovery, we want to be taking longs. Here's an example of a trade that I would not take, okay? This long position right here. Now, this is not considered a V-shaped reversal. You can see that we have around 10 to 12 candles before we actually close above that bearish fair value gap. Even though it's in the shape of a V, this is way too late of an entry. Here's another good setup. Again, not an A plus setup. We are delivering from a 3-minute bullish fair value gap, sweeping this liquidity level right here. And again, right, you can see sharp inverse, bullish momentum, taking out that liquidity with that instant V-shaped reversal. So this would have been a solid trade to take as well, targeting these equal highs here as our take profit. So again, another 1 to 3.5 risk to reward. Long position, I wouldn't take this one. This fair value gap is way too small and this wasn't a V-shaped reversal. Here's an example of a trade that you could take. Again, delivering from a 5-minute bullish fair value gap. We do get that sharp reversal to the upside. This entry is a little bit late, right? You want the V-shaped reversal to be closer to that liquidity sweep, so somewhere around here. But this one, I wouldn't be mad if you had taken it. Just give your stop loss a little bit of room to run. Again, targeting this high here as your take profit. Okay, another A setup right here. We have a sweep of this liquidity level all the way to the left here, delivering from this fair value gap in our optimal trade entry, bullish momentum, and we get that V-shaped reversal with that internal liquidity sweep. So this would have been another solid trade. Now, this most recent short signal was a valid short signal. Even though our bias is bullish, we can see that we swept 1, 2, 3 sets of liquidity. Okay, 3 liquidity sweeps into that sell signal with those bearish divergences. So I would consider this another B plus setup, moving your stop loss to break even at the most recent structure lows, targeting the lows all the way down here. Guys, this is way too far away from the liquidity sweep, so I would not take this signal here personally. So I hope you guys kind of understand what to look for when I'm talking about a V-shaped reversal. And I'm using real-time price action. I'm not going back. I'm not cherry picking certain data. This is literally from today. This is literally from Asian session. Like, I could find much better setups, but I want to show you in real time, what this will look like on your chart. And I want you guys to go back with this indicator and try to spot these setups for yourself. Go back and back test this. Don't take my word for it. Follow the rules that I've laid out. You're not going to be hitting 10 out of 10 trades right away, right? It's going to take some time, but hopefully after a few weeks of live testing this, using the system out in real time for yourself. But what you need to know is that this works. My members are using this every single day to crush. Now, I'm showing you guys this on NASDAQ, but this also works on crypto, Forex, stocks. We have members trading everything with this. I think that's going to do it for this video. If you guys have found value, if you guys have enjoyed, make sure to leave a like on this video. If you guys want access to the Manipulation X indicator, make sure to click the first link in the description below. Subscribe to the channel for more trading content, and I will see you guys next video.